In 2020 to 22, interest rates were at historic lows. People were getting apartment complexes at 2 to 3% rates. But the problem was they were only offering these incentives for up to 3 to 5 years. Well, 3 to 5 years has come, and every year more and more assets have to be refinanced or liquidated. But what happens when you paid too much for a property? Well, if everybody was buying these properties at 4 to 5% cap rates, thinking that the cap rates would stay the same, they were overpaying. They weren't anticipating that as interest rates came back up to normal, everybody would be trying to sell, and they would have to sell at a loss. It was easy to raise money because everybody had money to spend. The economy was booming, we had checks coming in from all over the place, and people weren't spending as much money because they were stuck at home. So they started investing in syndications, and new syndicators got into these projects. Now, David Elder was not one of those new syndicators. He'd been doing this for a long time, but he got caught up in the hype like everybody else. When you overspend and you don't foresee the market coming down, it's inevitable that you will be losing money when you have to eventually sell. If rents also went down and San Antonio delivered another 15,000 new units, people move out of those, vacancy rates skyrocket, and the property no longer becomes sustainable. You can't even make the mortgage payment, much less pay back investors. All of these things are a perfect storm of places where syndicators have gone wrong. Now, what happens next? We really don't know. The assets will be held up in court for a while. They might be sold off for parts. And maybe, eventually, some of the investors might see pennies on the dollar of what they invested, unfortunately. But this is not something that's just happening in San Antonio. This is happening everywhere that people were selling multifamily and office buildings back in the early 2000s. We're seeing syndications crash and burn for people who weren't prepared to last out the storm of lower rents, higher vacancy, and higher cap rates.